The U.S. labor market is facing a surprising twist that could change how we view its recent strength. The government has just announced a major downward revision in the number of jobs created over the past year, signaling that employment growth was slowing well before President Donald Trump's highly debated import tariffs came into play. But here's where it gets controversial. How much of this slowdown is due to policy versus natural economic shifts? According to a preliminary report released on September 9, 2025, the U.S. economy generated approximately 911,000 fewer jobs between April 2024 and March 2025 than previously believed. Before this revision, economists had anticipated that job growth figures might be trimmed by anywhere from 400,000 to 1 million jobs. The official downgrade settled at nearly 600,000 fewer jobs added during the year, painting a picture of a labor market that was already losing steam prior to the tariffs that have dominated political headlines. This adjustment stems from the Bureau of Labor Statistics' annual benchmark revision, a process designed to fine-tune monthly payroll data. Every year, the BLS updates its employment numbers by comparing them with a more comprehensive and reliable source: unemployment insurance tax records collected in the Quarterly Census of Employment and Wages, QCEW. This final reconciliation, expected in February 2026, will further revise payroll figures for months preceding and following March 2025, offering a more accurate snapshot of the labor market's real performance. The timing of this benchmark revision is especially notable, coming just days after August's labor report revealed a near standstill in job creation, along with unexpected job losses in June, the first drop in employment seen in over 4 years. One might wonder, was the labor market already faltering even before the latest trade tensions and tariffs took center stage? Several factors are squeezing the U.S. labor market beyond trade uncertainty. The White House's crackdown on immigration has reduced the available worker pool, and businesses are increasingly adopting artificial intelligence and automation technologies, leading to less demand for traditional human labor. These technological shifts challenge conventional employment trends, raising important questions about the future of the workforce. Despite these downward revisions, economists generally agree that this news won't drastically alter the Federal Reserve's monetary policy path. The Fed is widely expected to resume cutting interest rates soon after a pause earlier in the year, in part because the weakened labor market suggests less economic overheating. To understand how these employment figures are calculated, it helps to know that the BLS collects data via its current employment statistics program by surveying about 121,000 businesses and government agencies, covering roughly 631,000 work sites. However, these monthly surveys can miss some changes, particularly with new businesses opening or closures happening. A gap the birth and death model aims to estimate but cannot perfectly capture. The QCEW data, drawn from state unemployment insurance reports, includes about 95% of total employment, which is why it serves as a more definitive benchmark. The sharp downgrades in employment data for May and June last month didn't just surprise economists. They also provoked a fierce reaction from then-President Trump. He dismissed the data as fake and fired BLS Commissioner Erica McIntyre without providing evidence of wrongdoing. Trump nominated E.J. Antoni, an economist who has publicly criticized the BLS and even suggested suspending monthly employment reports, to lead the agency, a move that has alarmed many experts who question Antoni's qualifications across the political spectrum. In light of these tensions, the National Association for Business Economics has called on policymakers, business leaders, and economists to support the BLS and protect the integrity, independence and credibility of America's vital employment statistics. This situation raises a critical question for all of us. How much trust should we place in government employment data, especially when it becomes a political battleground? And as automation and immigration policies reshape the workforce, what new measures might be necessary to truly understand the health of our labor market? Share your thoughts. Do you trust the numbers, or do you think the story behind the data is even more complex than it appears?